All right, so that's the daily picture. Let's take a look at the larger picture at the moment, particularly when it comes to blockchain tech and its potential applications, in particular, tokenization. We're joined by Ian Lowe from Dacxi. Ian, good to catch up with you again. Actually, can we just start with looking back at May? It has been a tremendously volatile month across the board there. Bitcoin, I guess, suffering less than some of the altcoins there, but how would you sum it up?
Oh, volatile is, I think, the single word that expresses it best. I mean, obviously, the circumstances around Luna in May had a knock-on effect. There's been a lot of discussion and debate about the extent to which the demise of Luna impacted the market generally. We can debate the semantics of that, but clearly there was a knock-on effect, and there was a bit of a clear out. These things are, by and large, if you take a longer-term view, really positive, because these price corrections really start to address the sustainability of the long tail of crypto. We've got tens of thousands of cryptocurrencies. How sustainable are they all? Well, they're not. Only a small subset of those will survive a 2, 3, 5 year time frame. So I think it's going to continue to be volatile. You could ask 10 different people about what Bitcoin's going to do next week, next month, next year. You'd probably get 10 slightly different answers. But certainly our view is, if you're going to be investing in crypto, you must take a medium to long-term view.
I mean, as we know, it's an extremely speculative asset class. So given that, do you feel as though that it's coming under enormous pressure at the moment, obviously because of the macro background, as we know, with rising inflation, rising interest rates, the geopolitical risks. Plus, of course, you would imagine that perhaps many investors have lost on the equity market, and that's also impacting what's going on with crypto.
Yeah, look, I think all those things are right. In terms of instability, I think that's generally well understood. But what's also interesting is that crypto started out as being entirely uncorrelated to markets such as equity markets. Correlation has shifted and increased. So, as institutional participation in crypto has grown exponentially in 2021, if we're seeing equities markets struggle, there is going to be a knock-on effect, and increasingly that's going to be felt by what has traditionally been a more speculative asset class such as crypto.
All right, Ian, so that's what's going on at the moment, but as I flagged at the beginning there, I wanted to talk about tokenization, which I know you're intensely interested in. So, first of all, what is it? Because, I mean, this is enabled essentially by the blockchain, is it, where an asset can be broken up, it's divisible.
Yeah, so exactly. So there's a couple of things, Andrew, that would characterize tokenization. In essence, it really is just the digital manifestation of a record of ownership or transfer of ownership of an asset. And the entry point for blockchain has been cryptocurrencies. So as we all understand, Bitcoin was the first. Blockchain became a reality because of the creation of Bitcoin. But tokenization is because of the underlying blockchain. If we can just park cryptocurrencies for a moment, cryptocurrencies are a very important entry point into a much broader, more structural disruption of the finance industry globally. And the reason for that is because blockchain allows two parties to transact with each other without requiring an intermediary. Now, the significance of this is that if we look at the finance industry today, a significant percentage and some of the largest players in that global industry are intermediaries. They ultimately sit between the two primary beneficiaries of a transaction, whether that's just transferring dollars or whether that's the sale of an asset or anything else. And so if we talk about the ability for blockchain to empower the two primary parties in any transactions to deal with each other directly and to remove that intermediary or the disintermediation of that, the implications of that are absolutely material. And this is also the opportunity around that disintermediation is driving an enormous amount, billions and billions and billions of dollars of VC investment into blockchain-powered technologies to take advantage of that opportunity. So tokenization is just simply the digital expression of the ownership of any kind of asset. That's made possible through blockchain. And some of the broader implications of blockchain are there's this ability for primary parties in any transaction to deal with each other directly and remove some of those intermediaries, some of which are the biggest players in the world of finance today.
Yeah. Well, for instance, lawyers. That's one group right there where you're obviously they're the ones that facilitate that transfer of ownership. So if you're removing, as you say, the middleman, that's certainly a benefit to many, and also, of course, because it makes such an asset highly liquid too.
Yeah, it does. So what happens is as different asset classes become tokenized, and we can talk about where that's at today in a moment. What happens is you end up with this broadening ownership base of tokens, whether it's in property or precious metals or any other asset class. And of course, that opens up the opportunity for people to trade those tokens with each other. So the secondary market opportunity is really material. And there's a lot of investment going into developing capabilities around the world in that area. But the tokenization opportunity is really, really interesting because it manifests this very structural disruption to the way that the finance industry works today. I'll give you a simple example. So payments providers such as MasterCard and Visa and others, these are organizations that have got a very powerful brand, and they've built these enormous networks and rails that allow two parties to transact with each other through that network and using those rails. Now, if those two parties could transact directly with each other, not only do they in the process make that infinitely more efficient, but they remove a significant percentage of the transaction costs that are absorbed by that intermediary. So the attraction of getting to that point using blockchain technology is obvious, and the implications for the likes of the Visas and the MasterCard is significant. It is disruption of the highest order. They're obviously mobilizing their business around their brand to say, well, we're a trusted brand. We think that if people will trust Visa or MasterCard to facilitate a transaction the old way, we're hoping that they'll also trust our brands to facilitate it the new way being where they'll probably hang on to their infrastructure for as long as they can, and then build their blockchain-enabled capabilities in the background, still charge a fee. It will go through blockchain, but they'll hope to position themselves as that intermediary in the future. The extent to which, just using that as one example, they're able to do that is really an open question. And I think the idea that these companies won't be significantly disrupted would be false. I think that disruption is absolutely inevitable.
So I know there at Dacxi you're also looking at tokenization of precious metals. Just before we get to that, another great example is property ownership. And with many advocating that this could be a potential answer, particularly for those at the bottom rung trying to get into property, where they can't afford a property themselves. If you had tokenization of property, perhaps it's fractionalization, isn't it? That you could have a group of people buying a property which would help people get onto the property ladder.
Exactly right, Andrew. So this is one of the other dimensions to tokenization, is that we can fractionalize assets. We can break them down into smaller blocks. So in the case of housing, people that can't necessarily meet the hurdle of the entry price of housing may be able to do that through tokenization, where that hurdle is significantly lowered, and they would own a portion of an asset, whether it's residential or something else. And in the case of commercial property, it would give a path of access to the everyday investor, other than REITs or other mechanisms to create exposure in commercial property. And for those that are looking for investment to fund those projects, it also gives them a new path to funding. So Tokenization is sometimes referred to as sort of the democratization of finance, and this is the reason why. Is it massively lowers the hurdles of access that have previously existed in a range of different and compelling ways.
And it also comes back to that liquidity issue too, doesn't it? That, you know, once again with the example of property, that it is illiquid. Obviously, you can't. If you need cash, you can't just sell your property within hours. It's a huge process to go through. But you could potentially, if it was tokenized, sell a set of tokens to raise or to get some cash.
That's exactly right. So smart contracts allow us to embed obligations, conditions, and things of this nature, rules of ownership, into the acquisition of a token and the disposal of a token. And there are some mechanical things in specific to certain markets that would also need to be solved for as part of that. But the point here is that there are still a surprising number of people in some of these very traditional embedded intermediary type roles within established industries who are taking the same view that newspaper people took in 1998, which is to say, oh, don't be silly, people will still buy the paper on a Sunday, that's never going to change. And of course it did change, and it changed radically, and the implications were enormous. And so this, the Fairfax Press, the Deloitte's, I mean, all of these firms have come out and said tokenization will take place more broadly across all asset classes over time. By 2030, it's projected to be a $28 trillion industry.
Yeah, trillion.
Trillion. So again, just putting this in perspective, cryptocurrency is a very critical entry point, not least of which, of course, it gave birth to blockchain. But as an asset class, it really is sort of, 5 minutes into this transformation we're going through to digitize the finance industry globally. And tokenization really is this next and much bigger wave where asset classes will be tokenized across almost the full spectrum of the asset classes that we understand today.
So Ian, tell us what you're doing there at Dacxi with precious metals.
So this is where we've identified this is an area that's ripe for tokenization. There's a lot of demand for investment in precious metals. The process of acquiring precious metals is clunky for most investors. It needs to be vaulted. It needs to be secured. It probably needs to be insured. And the process of actually acquiring and owning various precious metals is clunky. So tokenization solves a lot of those issues. So today an investor can go through a KYC process on our platform, decide to invest $1,000 into gold, and the economic conditions at the moment are interesting for precious metals. Invest that money into gold. We will then go out and acquire the corresponding amount of gold, and that will underwrite the one-to-one. The physical gold will underwrite the value of the token. That gold is vaulted by a vaulting partner. It's independently audited on a regular cadence, and it's fully insured. So people aren't going out and buying vaults and doing all this kind of stuff. They can take a position in precious metals. They can get in at the market rate. They can get out at any time at the market rate, and they don't have any of the complication in between. So it's just one example of that sort of democratization where we're making an asset class that can be very clunky, not only very smooth and seamless, but we're making it really safe and simple for people to participate. And that's really what tokenization is. And the journey of tokenization continues not just for us, but for the world generally. We're looking at tokenizing additional asset classes in later this year.